Welcome to Mind and Machine Africa, unlocking the potential of AI in Africa. Today we're discussing responsible AI in Africa, trends within the financial services industry in Africa, as well as regulating AI within the African space. Today I'm joined by Kevin Mutiso, a good friend of mine and a man who wears one too many hats. So I'll take a few of them and he'll carry on with the rest. Kevin Mutiso is the founder and CEO of Oyo. Oye. He's also the chairman of the
Digital Financial Services Association of Kenya.
Yes.
Yeah.
And you also sit on an working group for responsible AI.
Yes. So I sit on that working group as a DIFSAC chair. So if there was another chair, they would be sitting in that working group. So I sit as a result of being the chair of the Digital Financial Services Association of Kenya.
How do you balance all of that? I think the other roles which I also haven't mentioned.
Actually, no. It's very interesting. I only have 3 roles actually, or maybe I say 4 roles. I'm a father,
Yeah.
so typically that's the job I take most seriously.
Yeah.
Because I'm a dad, I have responsibilities and bills to pay. So the way I pay my way through life is I'm a founder and entrepreneur. I think that's the highest calling known to man, but it's subjective. And then because I'm an entrepreneur that is of a particular kind of training, which is we're in a new age capitalistic society now. Part of my um, role or purpose is to ensure that I'm a good Kenyan and a good African. So the way I do that is by working with the industry to improve some of the products and customer protection policies that are there. And then, of course, speak about some of the challenges the industry is having to the regulators. And that's how I became involved with the association. If there's anything else, it's a result of one of those 3 or 4 jobs. Yeah.
So looking back, did you ever think you'd find yourself so close to AI, being part of a working group? Was that something which you thought would happen in a few years or much further down the line?
So interestingly, digital lending has been using algorithms for a long time, and AI is something that was coming up. It had been in existence way before digital lending was a thing in Kenya. Digital lending became a thing in Kenya in 2014. You had 1 actor by 2016, you had 50 by 2021, you had 400, right? We all use some type of algorithmic machine learning system as part of our credit scoring tools. And so we've been dealing with AI for a while. What has fascinated me is how quickly AI has translated to a B2C product. It was typically a B2B product. Now it's, you can have ChatGPT and have a personal assistant and stuff like that.
Yeah.
But we in the financial services space have been using it for a while, not just for credit scoring, but even fraud detection, profiling customers, etc. So when we were asked, I was asked to sit on this technical working group. I wasn't particularly surprised, but I was very excited because it was the first I had seen which had global attendance. So we have everyone from most parts of the world, from the US, from Europe, from Asia, from Africa. And then it had a mix of regulators. So we've got the FCA, we've got Monetary Authority of Singapore, we've got entrepreneurs like me and industry associations. And then you've got lenders, banks, banks represented in this working group. So it's quite insightful.
Yeah. Financial services are known to always sort of leapfrog other industries when it comes to the adoption of new technology. And clearly, digital lenders have not been strangers to the use of machine learning algorithms. What do you think is going to change now that we have the large language models and we have all this generative AI?
I think the way we interface with the world as humans is going to change fundamentally. And I think it's akin to what did you do before you had a mobile phone?
Yeah.
I laugh when I hear I hear people saying, I used to meet my girlfriend, who is now my wife, at a particular call box because they knew at 3:30 that's where they had to be if the date was going to happen. Because if one of them was late, then the date wouldn't happen. And you think about that world and you say, wow, it'll be the same for AI. We already have sort of personal assistants that can answer certain specific questions pretty well. Um, they already help us do our work better.
Yeah.
I recently had a presentation to give it was actually at a CIO DX5 event. And I used AI to create my content and to arrange my PowerPoint presentation.
Yeah.
Right. And it took me less than 30 minutes to do so, when it normally takes me maybe half an afternoon to do so. So, AI is it's going to change the way it works. So one of the key things, and I like telling people who are not so aware about AI, is that it's moving the average up.
Yeah.
All right. So if let's say competency was X.
Yeah.
Now the average of competency was X in a specific field. It's now going to be X plus 5 or X plus 6, because the guys in the middle now will have these tools that they can use to make them move faster.
Yeah.
And so the top is going to become more competitive.
Yeah.
Yeah. And then if you don't use AI, you're going to be left behind in dust.
Yeah, true. Yeah. There's always, I guess, with every form of technology, you either get on the bandwagon or stay behind.
Yeah.
When you look at Kenya specifically, and how the various lenders have used their machine learning algorithms, all of them have used them differently, and of course they've all had different data sets. That's why I guess they all score people differently, and they all use their models maybe to determine what kind of risk to take on which different lenders. We're now in the age where we are going to expect a lot more intelligent math models to come out, or hopefully we'll start seeing large math models instead of just large language models. And this, of course, will change how money, generally the financial services industry. One part that I see is not really being touched on, and maybe being the chairman, maybe there are a few financial services providers who are doing this. Are there any organizations that are leveraging AI for financial literacy?
Well, financial literacy is an interesting one, because I always argue that the problem with financial literacy is the way it's framed by, say, a regulator, is always in a way that doesn't excite the customer. And so when we look at it from the business point of view, the return on investment for us in terms of retention, acquisition, even profitability is usually very low, in the way they frame financial literacy and how it's supposed to be.
Yeah.
Now, if they meant that financial literacy is some kind of gamification, to enable the customer to understand how best to, say, get loans or to get insurance, etc. I think we as digital lenders are already doing that, because I'll give you a very simple example. I think everyone now knows that if you have a good credit history, your limit goes up.
Yeah.
Isn't that AI?
Yeah.
That's machine learning. That's financial literacy. It's basically telling you, hey, you pay your loans on time. If you pay your loans on time, there's a direct benefit to you as a customer.
Yeah.
So when you look at AI or financial literacy from that gamification point of view, then I think this is where AI comes to play its role. I think you're going to start seeing more advanced games.
Yeah.
I don't know if you saw the headlines yesterday about, was it today? I'm not so sure. About betting and how much we're betting almost 20,000 shillings a second or a minute as a country, right? Yeah. So we do love gamification and gamified experiences.
Yeah.
And AI is perfect for designing those.
Yeah, it is. You mentioned the word regulator and regulation a few times. I think early on when we first met, you're one of the few people who took away that image of regulation being a bad thing. I was always anti-regulation. I always assumed industries can self-regulate on their own. I guess now you're taking a lot of proactive steps as an association, just to ensure that the industry is safe and ethical. In terms of what you're doing at the working group around regulation, could you shed some light on that?
So let me give you context about
Yeah.
why I was pro-regulation.
Yeah.
So we are in a small country called Kenya. Our GDP for the whole country is 110, 120 billion dollars. And at the time, there was about $14 trillion of dry powder sitting, waiting to be invested. And so we as entrepreneurs were asking ourselves, this is nonsense. Surely we could be able to attract some of this capital to come and work with us.
Yeah.
And anytime we'd approach them, and as many people would know, it's not easy approaching that type of capital because they're exclusive, they're part of members club, blah blah blah. They'll tell you, but are you regulated? If you're in financial services, we like to deal with regulated entities. Why? Because where the capital sits, be it in the US, in Switzerland, or in Europe, they're also regulated.
Yeah.
So they're being told, if you're investing in a lending business in Africa, you might want to give them $1 billion, but if you give them that $1 billion, there are these risks that come with that if they're not regulated.
Yeah.
So we as the sector said, we would be fools not to try and attract that type of capital into this market. And that's actually one of the big reasons why we pursued regulation. The second thing was the rogue actors and how they were spoiling our name.
Yeah.
Which in equal measure was perplexing us because we're sitting there and saying, how can one lender literally send messages to 100 people because one customer defaulted? Then that one customer, that one lender then creates problems for all the other 400 lenders who, and in fact, forget the 400 lenders. The association where I chair, we are 27 mission-driven fintechs who've actually done quite a bit of innovative work that is not just recognized in Kenya, but globally. And we want, and that's actually one of the big things where the last governor, if you remember, would have these very ludicrous headlines of there are fleas and whatnot, was because of these, singular incidences that would give us a bad name. As a result of that, we said, okay, guys, we've got capital sitting in the wings, we've got consumer protection issue. Why don't we try and solve both of them and get through regulation? Now, the challenge with Kenya is that regulation in Kenya has always been top down. So it's not a conversation, it's not an engagement with industry. It's government telling you from now on, boom, boom, boom.
Yeah.
It's 2023. I think one of the things we've learned with the internet is it doesn't have, just because it was done that way in 60s and 70s and 80s, in Kenya, we can now start improving and starting to think about the modern new economy, where industry and government are not enemies, but agree that they will never agree. And actually what they need to find is the balance and how to engage to find that balance.
Yeah.
So we now move to AI,
Yeah.
right? AI has obviously unique risks to our society.
Yeah.
And as a result, you find markets that are a little bit more advanced and a little bit more forward thinking, like Singapore, are taking the step forward to figure out, okay, we can't design regulation for AI the way we designed regulation before.
Yeah.
Because it's amorphous. We don't really know what it is. We don't know the consequences of some of the things, but we've got to let this thing go as well.
Yeah.
So what they focused on is principles-based regulation, where they came up with an acronym known as FEAT, F-E-A-T.
Yeah.
F stands for, I always forget what it is. Fairness.
Yeah.
E stands for ethics, A stands for accountability, T stands for transparency.
Yeah.
Fairness, and then within those principles, they have a way of measuring so then the next step is monitoring and evaluation.
Yeah.
How do you monitor and evaluate fairness? How do you monitor and evaluate ethics, accountability, and transparency? And so now that's the next question they attempted to answer.
Okay.
And the way they answered that is the logical way, which is let's do some research.
Yeah.
Let's get a bunch of lenders who are using AI for credit scoring and fraud detection, and let's test and see how do we define fairness. So they define fairness in a specific way, and then measure against that metric.
Yeah.
Now, here's the cool thing that has happened. What they found is that the more fair, and the fairness was, and this was an American study, not Singapore, but Singapore has their own, which found similar things.
Yeah.
But I'm quoting the American one. Is they measured fairness as, does it give loans to a wider demographic? So does it include women? Does it include, so ratio?
Yeah.
Right? Blacks, Hispanics, blah, blah, blah. Because there's a direct correlation to profitability. So they found that the more fair an algorithm was, the less profitable it was, right? If you really think about that, that mimics nature.
Yeah.
Right? That's how nature is.
Yeah.
So life is not always fair. Those that have a little bit of an unfair advantage gain more than those that do not.
Yeah.
Right? Now, the question the regulator then had to start asking themselves is, what's the line that we now decide is too unfair?
Oh, okay. Yeah.
Right? And those are the better conversations to have. I'll give you another example. When it comes to accountability and transparency, explainability is important.
Yeah.
Why did the algorithm pick Michael and not Kevin? Right?
Yeah.
That's, everyone wants to know that.
Everyone wants
It's
to very difficult to know with the black box issue.
Exactly. Yeah. So this study that I'm quoting found that explainability was low to mid.
Yeah.
And so they were unable to find correlations in a lot of the variables that the algorithm was using to determine why Michael got it and Kevin did not. Now, the question the regulator there then has is, do they have the mandate to ensure that they can explain to Parliament, the legislative, the people, why they've allowed this algorithm to work in the private sector, yet they can't explain why?
So it's no longer an issue of explaining how the algorithm comes up with the decisions. It's explaining why you're using the algorithm.
It's why the algorithm is making the decision. But from the regulator's point of view, is they will have to answer to the people if something goes wrong.
Okay.
Right? Because remember, for them, it's to protect the consumer and maintain economic stability. So if one of those two breaks, everyone will turn and say, okay, why did you allow this thing to happen? And then they'll say, well, we noticed explainability was low to mid, but we saw the benefits of the algorithm was A, B, C, D. So now that's the conversation that they need to start having, because as regulators, they need to be able to explain to the people, which is usually the legislative and senior people in government, that and why it's working as such. Now they're going to have a tough time. What I like, though, is that they're having these conversations and they're following this very methodical process to understand the AI and how to regulate it.
I think the FIT principles, as you've mentioned them, in terms of coming up with those four principles, defining them, and then the standards of how you're going to monitor and evaluate them over time is where the work is being done. Because it's pretty straightforward that yes, it should be fair, it should be accountable,
it should be ethical,
it should be transparent. But this group that you're part of it's a very global group, and ethics is a very sticky subject, and it sort of shifts
depending on where you are.
Depending on where you are geographically, depending on where you are also in terms of your philosophical alignments and everything. So how do they come up with a unique standard for ethics?
Those are the tough questions. It's how do you do that? So you've got to ask the questions, what are the lines that we as a society are not going to allow to be crossed? Right? And once we understand those lines, then we then create a framework where every algorithm must meet this minimum standard.
Yeah.
And that's, it sounds so easy, but technically that's what they're going to have to do.
Yeah.
The hard thing is going to be defining those lines.
Yeah.
Because different markets, different nuances, different cultures, different needs, right?
Yeah.
Some markets need to have companies that are more profitable so that they can pay more taxes. Other markets have very strong consumer protection guidelines. So just by the mere fact that those protection guidelines exist, certain things would happen around the ethics piece.
Yeah.
If enough women and disadvantaged people are not applying to these products,
Yeah.
what then happens?
Yeah.
I'll give you some context. We are currently working on updating the code of conduct at the association.
Yeah.
And creating a gold standard data privacy policy for the digital lending ecosystem.
Yeah.
And when we engaged the Office of the Data Commissioner, they came back to us with something none of us in this ad hoc committee had ever had.
Yeah.
They asked, what if somebody is disabled?
Yeah.
Or is disabled, how would they understand or perceive this data privacy policy, and how have you catered for them in this policy? Right?
Yeah.
If government doesn't tell business that,
Yeah.
business won't go out of their way to start thinking about that, because we are looking at the majority. It's not that we want able-bodied people only. We want guys who can pay us back.
Yeah.
And that's the metric we're sort of using. So that was very insightful.
Yeah.
Another one was digital lenders. How are you solving for people who don't speak English as a first language, right? In your terms and conditions and privacy data policy, and you're like, okay, wow, okay. So do we need to translate these clauses into Swahili? Are there legal consequences? Because if you know anything about the law, where NDs, AND changes the whole contract.
Yeah.
So there are those things that need to be dealt with. So back to your point about ethics, it's going to be subjective.
Yeah.
Every society will need to have these conversations. What matters is they have candid, timely, so that they don't take too long, and then create the ability to iterate.
Yeah.
So that if they see they made overcorrected on something, they can, fix that. Or if they see they fixed something, they can add additional capacity. And that's what really matters, is how does this thing evolve moving forward?
Moving on to transparency, just a thought occurred to me. Other than, I think, 3 organizations that I know of where I had to consent to them using my data to train machine learning models. Is that mentioned within terms and conditions within the digital lending ecosystem?
Well, it may not be in those express words, but definitely it is important under the DTPA.
It is implied.
At DPA 2019, during the compliance process, one of the things we are told to do is list all the data we collect and why we need it. And then we have to justify. And sometimes the data commissioner, the Office of the Data Commissioner can say no. ABCD, So, some entities have decided to be more explicit in their wording. Others may not even know, because this is such a new space, right? Others may be basically just trying to make sure they're in compliance with the law and not really focused on what the customer really thinks. And I think as a society, we just need to be aware of that fact, that some people are just doing it to meet the minimum standard.
Because I was thinking, if my data is going to be used to train, I know there's a whole topic around data sovereignty, which we're not yet at that stage of a society where we can claim sovereignty of our own data and actually be paid for our own data. So for now, we are at the mercy of, you need this service, you have to sacrifice your data to train its models so that you can then essentially get whatever service is there. then the challenge of, because we have now within the Data Protection Act of Kenya, there's a possibility to ask for your data. And there's also, we've seen in GDPR, the right to be forgotten. Now, the right to be forgotten or to have your data deleted when it comes to machine learning is very, well, it's practical, but it's very expensive. So how do you think in form of regulation or standards this would be handled? Because if you get a complaint today and someone's data was unfairly used to train a model, that basically means you have to go to your base model, train it without this particular set of data, and then bring it up to speed with the existing model. And that's a lot of work. It's almost shutting down your business just to tinker with that one person, and these requests could come in one after another after another.
So before I answer the question I'd ask you is, what proof would you have that your data was used to train this model to be biased?
I can give the example of Getty Images. I think that theirs was pretty straightforward, where the generative AI models used to create images and videos ended up putting up watermarks from with the Getty image logo. So it was very clear their images were used, and they were used without their consent, and so they asked for that to be removed from the training set. I think as an individual, especially on your personal information, name, phone number, all that, it's very difficult to find out it's been used. I think you'd have to inquire directly, write a letter to the service or the service provider that you think is doing it. I think the easiest way to know is if you don't use the service and the service contacts you, then you can ask them for what data they have about you. And if they bought the data elsewhere, sort of follow the trail of crumbs. But it's also a task on its own.
If using your data without your consent, that's already in breach of the law.
Yeah.
Right?
Yeah.
Okay. So the right to be forgotten or the right to be that initial
Have your data deleted.
Have your data deleted or trained, have the data trained without your data.
Yeah.
Is a future discretion. The first one is that they used your data without
your consent. Yeah.
So if that's the case at an individual basis, the likelihood that they're using other people's data similarly is also very high.
Yeah.
So what's likely to happen in such a situation is the office of the data commissioner has the power to fine and to recommend to other regulators that additional clampdowns need to happen. And we saw this recently with WorldCoin, where you saw the ODPC put out a warning, and then the cards and the chips fail, and now WorldCoin is no longer in operation in Kenya. Right? So that's how it works. I think that's the best case example. Now, the case you gave me for Getty Images, that's a large conglomerate that has the technical ability to tag their picture so that they can, tell you the model builder that, hey, you're using my images.
Yeah.
That's a very different circumstance from the individual.
Yeah.
So I hope my point has come out with those two different examples.
Yeah, it's come out. It's also touched on fairness. So I just felt like of course, there are lines. Well, it's very easy for Getty Images. It's not so easy for the individual. It can't be equally. It can't serve both.
Yeah.
So the sense of fairness also comes into play.
Exactly.
Digital lenders, I think, have pushed disruption in the financial services through the adoption of technology. Now they've been using machine learning, and now they're going to. I think there's going to be a lot more push to use the transformers and other large models which are coming up. At what point do you see the rest of the financial industry, in particular banks, who tend to move at a very steady tortoise pace? When do you see them coming on board and saying, well, okay, we want to try machine learning, we want to try, because they've never adopted the technologies, but I've seen them partner with the fintechs who have adopted these technologies.
So first of all, I disagree with you.
Uh-huh.
Some of the most innovative businesses in this market are banks. I think this notion is popular to say that banks are always behind.
Yeah.
I disagree. I think banks have a unique challenge where, because they're the most heavily regulated entity in a financial system,
Yeah.
they are not as nimble or as fast in some instances.
Okay.
I always joke, and you had me joking earlier.
Yeah.
Banks start product design from compliance, then go to the customer problem.
Yeah.
Fintech start with the customer problem, then build the product, then go to the regulator
Yeah.
after.
Yeah.
So that different nuance, that
Yeah.
little nuance gives the fintech that ability to scale and build something exciting.
Yeah.
But the reality is, at some point you'll have to plug in with the bank,
Yeah.
because the bank then has everything else that a fintech needs
Yeah.
to now properly take advantage of that little new market they've created.
Yeah.
So that's point number one. I disagree with the premise that banks are not innovative. So if that's my premise, then how soon are they going to use AI? Business people, we're all the same.
Yeah.
If it makes money, we're going to try it. So the problem is that, or probably in the early days of digital lending, the profit margins were not as exciting.
Yeah.
Now they probably are.
Yeah.
Number two, in the early days, the solutions for cybercrime and fraud detection and fraud prevention were not as effective.
Yeah.
Now they are. So as soon as you're helping me improve my profit margin and
Yeah.
reduce my cost, why would I not use it?
Yeah.
And the bank is usually the most ruthless when it comes to profit, maintaining profit margins and,
Yeah.
and cutting costs.
Yeah. Well, that's interesting. I would counter on yes. Okay, I see the sense in the comment that banks are innovative. I've been on the side where I believe banks have had three innovations ever: the ATM, online banking, which constitutes the mobile banking and everything after that, and the use of derivatives. I think after that, everything was built around that, and nothing completely new came.
Wow. So you and I would argue for days, because I think you've forgotten the first innovation the bank came up with, which is money,
Money.
right?
Yeah.
And then after that, they allowed us to exchange value using a piece of paper based on a gold deposit that you and I had not seen,
Yeah.
to exchange value for other goods and services.
Yeah.
And then and then what people forget, and if you read your history, the best security systems have always come from the banks. What many people who are not in finance don't realize is everyone knows a bank has money.
Yeah.
Ama?
Yeah.
Everyone knows a bank has money, including the bad guys.
Yeah.
So the bad guys have just as much laser focus
Yeah.
in trying to figure out how to take
Get
money out.
Yeah.
So if I've been to some of the old banks in Vienna,
Yeah.
where the goldsmiths, and you listen to some of the security features they had back in those days, and you're like, wow, So to say that banks don't innovate, I think is very unfair.
Okay.
I think what has happened over the years, because it's so easy to take advantage of a banking model, because what I'm telling you is deposit your money into my bank account, where I, banker, controls your money.
Yeah.
And then fraud, governance, trust issues then happen. Then people run away.
Yeah.
And then you, the consumer, loses your deposit, and then that becomes an issue. So even if you look at the history of America, for example, where they were fighting this idea of the central bank because they didn't want to be like the Europe, where they had these monarchs and a central bank. They wanted this democratized financial system. Had to accept after the 1897 crash that, hey, we need a regulator of some kind.
Yeah.
And yes, maybe we don't government. Let's create a system that works in our philosophy, but has to be centralized. And that's when the Federal Reserve came into being. So they've just gotten progressively more and more regulated over time.
Yeah.
Right? The moment you're dealing in lending, right, you can create real economic problems. And this week alone, the SEC in the US is now starting to regulate private equity lending. Why? Because you're going to create because this is unregulated lending.
Yeah.
It's still people's money. What
Yeah.
happens when there's a default?
True.
Right? Now
Yeah.
interest rates are up,
Yeah.
right? From 0 to 5%. Businesses that were not priced in those margins are going to collapse or are going to have hard times.
Yeah.
They're going to have their ratings taken down. That's going to affect portfolio quality. Boom, 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 economic collapses.
Yeah.
Right? So banks have always had to get better and better regulated over time, and therefore have had to become innovative in different ways. Yeah.
Almost makes me feel like saying maybe banks might have a better shot at helping come up with regulations around AI, not specifically from a technical perspective, but because they have that history of understanding the consequences and how they have adapted towards regulation.
So that's where, again, I'll disagree with you, because that institutional memory does not exist in a lot of these banks. Remember, these are bankers who went to MBA, and then a lot of these people have not done the history of banking to the detail that probably most professors would have done.
Yeah.
The thing with people like me who are entrepreneurs is, because we want to disrupt, we've got to do the history.
Yeah.
Right? We've got to understand, how does this machine, this animal work? So that's the nuance there.
Yeah.
I agree with you where I say banks should be at the forefront. What I would add is that they're not the only financial services actor anymore.
Yeah.
Right? They have a different perspective.
Mm-hmm.
Fintechs have a different perspective. Insurance companies have a different perspective. Telcos, mobile money wallets, all have these different perspectives. And so as a result, the banks shouldn't be the only one in the room.
Yeah.
But they're important it's important that they are in the room.
Yeah. So let's go back to your company, your new startup. You've had a few startups over the years. Are you planning to use AI or machine learning, or are you already in use?
So my life story is interesting. So I've had 2 startups where I've been CEO.
Yeah.
And I've invested in a few. But
Yeah.
2 startups where I've been CEO. One startup was purely digital lending, and I learned a lot of lessons. I always tell people that was my PhD.
Yeah.
And then now we started Oye. The reason we started Oye is because now we had answered we had gone through the school. They used till PhD level.
Yeah.
So where we are designing Oye is, first, the premise is, can we build $1 billion business in Africa?
Okay.
And in Kenya in particular? And the answer was yes. Then the next question is how?
Yeah.
The answer is find large demographics and be very relevant to them.
Yeah.
So that's how Oye came up. The large demographic is a boda rider. Being relevant is providing solutions that are very, very specific to them, like our initial product, which is every 90 liters of fuel you consume at a partner petrol station, you get a free personal accident cover as a boda rider. There's no additional cost to you, the boda rider. And for the petrol station, they get aggregated demand, so they see an uplift in the amount of fuel they sell.
Yeah.
Fuel is a volume game. So volume means more revenue, more profit. So how are we using AI, right? We're using AI to build up understanding of what the next products should be.
Yeah.
And then in addition to that, we're using AI for the credit algorithm, credit scoring tools. And then we're also using some tools to identify which towns to target to go next.
Yeah.
As I told you, tomorrow I'm in South Nyanza.
Yeah.
Recently I was in Laikipia and Meru. Before that I was in western region, Bungoma, Busia. Before that I was in the coast.
Yeah.
I'm looking at a data set, and then it's telling me a set of nuances, and then I go see for myself. Is it true that X and X town is growing faster than X and X town?
Yeah. And
is this better that we set the base here and not there? So that's how we're using data.
It's very interesting.
It's a lot of fun.
How do you, I'm trying to picture the kind of data you'd need to say this town is growing, that town is not growing as fast as this one.
I can't tell you because that's a trade secret,
Yeah.
but it's exciting stuff. We're learning a lot.
Yeah.
We're learning a lot. Kenya is one of those weird countries that we don't realize how far we've come.
Yeah.
in terms of democracy, in terms of our rights. So there's a lot of data out there that's sitting in all these different offices. You just need to know how to get them, and then how to consume, and then how to use it.
Yeah. Uh, Going back around when you mentioned women and the disabled, and there is always that aspect of discrimination. And initially, whenever a new form of technology comes, there's always that question of, will it increase the marginalization will be made worse or better? And initially, the fear is always that it's going to increase marginalization. Now we've seen the shift from a B2B within artificial intelligence to a B2C. A lot of these ones have started off as free, but of course they're freemium. You can use it for free with certain limitations, or you start to pay to use it. Do you foresee that also now creating widening the gap?
Look, man, this gap issue is contextual again, right? I like using the example of the Netherlands. I'm forgetting the Gini coefficient of the wealth in Netherlands, but
Yeah.
the Dutch were the original capitalists. I don't know if you know that. So they're sort of the ones who invented the modern day capitalist, because they created this thing called the company. Right? Then the company was used to aggregate capital, and then they went around the world conquering.
Yeah.
And they started that using their port, blah, blah, blah. Anyway, the because of that,
Yeah.
in the Netherlands, the GDP per capita is really high.
Yeah.
Right? But almost 90% or 95% of them are employees. The rich are extremely rich, right? So when you look at the Gini on wealth,
Yeah.
right, the wealth is held in a concentrated few,
Yeah.
and very few of everyone else is technically an employee.
Yeah.
But the quality of life is high.
Yeah.
Right? Which should be the objective. The objective isn't, I want to be as rich as Elon Musk. It should be that the bottom pyramid in our society is doing well enough to cover their basic needs and more, and live a fulfilling life.
Yeah.
Right? So that there is a sense of purpose and there's dignity of work.
Yeah.
Right? Now, when you look at it from the Kenyan point of view, the reality is, even if the same Gini, the Gini doesn't, it's a little bit more spread, because we are a young nation. The difference is here that the richest guy and the poorest guy is so poor, right, that they can barely cover one basic need.
Yeah.
And I'll give you a story. In the coast, there was a study, maybe I shouldn't say it because I can't remember the exact study, but there was a study where they were asking the respondents in a specific place, when's the last time you saw 1,000 shilling note in your hands? Like just, not 1,000 shilling. This guy said, I think 18 months. That's how poor he is. Remember, 1,000 shillings, touched it and could spend it. Our average, I think our median income or average GDP per capita is 14,000 shillings a month, right? That's including all the richest guys in the country. And look at it from an income point of view. So the average is telling you sort of where the middle is, but where is the bottom? The bottom is below 10,000 bob a month.
Yeah.
Now, just being an ex-banker, that there's some of us earning 5 million a month, 10 million a month, right? There's some who are even richer, where their businesses are doing 5 billion a year, in net profit or gross profit. That's the problem with that spread. So the question isn't, should we allow more people to get rich? And no, it's, can we move the bottom up? Which sounds like what the president is trying to do, by the way. What I don't want to get into is politics, but I see the argument from that perspective. Yeah.
Well, it's an interesting perspective. I think today you've taught me with your PhD. I feel heavily educated. So, as we wind up the conversation, if I can go back to the working group and sort of how the working group is progressing. Eventually, there's going to be a report, and that's going to come out from the working group that would be shared. Will it be shared now as to the association, to government, to stakeholders, or publicly?
Because I'm not leading or heading that working group, I can't comment on that. But what I can say is I expect that it'll be a document that would the final authors would want to be publicized because AI is such a important issue of the day. And I think the reason people like me exist in that section is so that we can sort of talk about it in fora like this, in some of the learnings we've learned, engage with government with a more clearer picture. Before this working group, I had never heard of FIT principles. Right now, I sort of have an idea. I have an idea of research I can recommend and quote to people to give as a demonstration of why this could potentially work. I think we could even add some more principles. It doesn't just have to be FIT, but there's a starting point where there's a baseline. And I think that's the objective of the report. Of this working group. It's to sort of just get enough people thinking about this baseline of fairness, ethics, accountability, and transparency, and then cascading it in their own markets, in the best way they can.
Yeah, thanks for that. Any parting shot?
Around AI?
Yes.
The way I talk about AI is we're at the beginning. It's like when we discovered fire. Right? The burger hadn't been invented, the pizza hadn't been invented. So we're just at the beginning. If you're interested in AI, if there was ever a time to be just to start, the answer is now. If I were to give the regulators any parting shots is work with the industry associations. We're not your enemies. We also have I like the JP Morgan CEO. He always says, I'm a patriot first before I'm an American. I feel the same way. I'm a Kenyan first before I'm a businessman. No, he's a patriot first before he's a CEO of JP Morgan. So same sort of line of thinking. We don't want the country, we want to have a flourishing business ecosystem, and we recognize that if the citizenry, which is government's perspective on the human animal being, is calling them citizen, then we have the same objective, right? So let's work together on these new technologies rather than taking this hammer and sledge approach.
Thank you, Kevin. It's been a pleasure having you here. As always, thank you for giving me something to go home and read on. Thanks for listening to the podcast this week. Tune in for more episodes. Please remember to like, subscribe, and share.